Hello everybody, welcome to our channel focused on trading. Today I want to address important points about head and shoulders pattern, such as how to find this pattern, determine the target, entry trigger and stop loss, and how to know that the pattern is failed and much more. Well, before diving into the topic, make sure to subscribe to the channel please if you are new and hit the bell notification on to get informed of next upcoming contents. Now, what is head and shoulders pattern? This pattern is a chart formation which appears on the chart with three peaks. The two outside are close in height and the middle one is the highest. This pattern is a kind of trend reversal pattern. The head and shoulders pattern believed to be one of the best reliable trend reversal patterns. This is the ideal shape of the pattern. Left shoulder or left peak, middle peak or the head, and this is the right shoulder or right peak. Well, this line is known as the neckline, and besides, this neckline is very important for us because our trigger activates after breakout of this level. So our entry trigger should be here after the confirmation of the breakout. For example, this is the breakout candle. A little below the close of the breakout candle, we should place our trigger entry, and if we look for more precise position and less risky, then after the probable pullback we enter the market, and our pullback should be a little below the neckline. So our entry trigger will be there. Our stop loss is here, about the open of this candle, I mean breakout candle. Well, now determining the target, the most important part of the story. Well, as much as the distance between the middle peak or the head and the neckline, we move to the down from the neckline, where the breakout candle locates, and then there should be our target and exit point. There it is. Sometimes the outside peaks are not located at the same height. For example, like this. This right shoulder is a little higher than the left shoulder. Two important points we should consider. First, none of the outside peaks should be higher than the middle peak, as in the picture. And second, the slope between the outside peaks shouldn't be much more, as in the picture, like this. Right now, let's dive to some real examples on gold chart at time frame 4 hours. The first example. This is our left shoulder. Well, the necessary condition which the head should be shaped is that the price after pulling down and making this shoulder be able to go up again and break out this peak. And as a result, it can be seen here that this case happens. Here is the head being formed. And after that, another pulling down to the neckline to shape the head wholly. And finally making the right shoulder or last peak at a lower level in comparison with the middle peak. Well, our entry trigger can be at these 2 points according to our strategy. Point 1. Below the close of the breakout candle. A little more risky. This point is a little more risky. Point 2. Right here below the neckline, where the price has a pullback. Before, I mentioned that stop loss should be above the open of the breakout candle. Well, since the breakout candle has a big body here, my recommendation is that the stop loss should be at least above the middle half point of the breakout candle's body. Or if you measure your stop loss with ATR, again you will see that your stop loss locates above the middle half of the breakout candle's body. The last parameter to determine is the target. Well, at least as much as the distance between the middle peak and neckline, the price will move down after the breakout and confirmation. And you can see that it happens beautifully here. Let's have another example. Another head and shoulders pattern can be seen here. Our neckline is this line. Well, this is at time frame 4 hours. Let me change the time frame to 1 hour. Here it is. Our trigger entries should be below the open of this green candle. And the stop loss is here above the open of this red candle. Well, let me switch again the time frame to 4 hours to better mark the target. There it is. Nicely, the target has been touched by these candles. Not all the time patterns come true, and head and shoulders, like other patterns, sometimes fail. Here are some examples that we check them how to know that the pattern failed. Example number 1. Here is a head and shoulders pattern. This is the neckline. Through this candle, the price attempts to break the neckline to the below. But the next candle, which is bullish, closes above the open of the breakout candle. And as a result, the pattern fails. In next example, the head and shoulders pattern has an angled neckline. That doesn't matter. As it's clear, the neckline locates here. And 2 times the price tried before to break this neckline to the down, but it wasn't successful, and eventually price pulls up and again the pattern fails. Well, exactly the same as head and shoulders pattern, there is the reversal of this pattern, which is a sign of probably a rise in price and appears at bottom most of the time. I don't give any example of this pattern here because I myself prefer and use the straight head and shoulders pattern most of the time, and it's more important than the reversal head and shoulders pattern. I hope that this video was useful and helpful for you all, and comment down if there is any part of this video unclear for you, and drop a like on video. Again, make sure to subscribe to the channel please. See you soon in the next videos.